Tena koto katoa. Kia ora. My name is Yasmin Yumul, and I'm a senior advisor within the Specialist Engagement Team here at Immigration New Zealand. I'm joined today by my colleague, Richa Trivedi. We're here today to talk to you about the Active Investor Plus visa, with a particular focus on the transfer and investment stage of the process. Today's session will cover policy changes that came into effect into 1st of June, an overview of the Active Investor Plus lifecycle, a closer look at the transfer and investment stage, transferring nominated funds to New Zealand, making acceptable investments, meeting the required investment amount, completing transfer and investment within required timeframes, investment period commencement, and the roles and responsibilities of Immigration New Zealand and Invest New Zealand. Along the way, we'll also answer some common questions that come up within each of these topics. Let's start with the policy updates. From the 1st of June 2026, policy updates to Active Investor Plus settings took effect. These changes increase flexibility and improve consistency across investor categories. The first policy update is that in the growth category, donations are allowed. Growth investors can now donate up to 20% of their total investment. For example, if the minimum 5 million New Zealand dollars is invested, up to 1 million New Zealand dollars can be donated. The donation cap will scale up where the applicant's investment exceeds the minimum investment required. The second policy update is that there is stronger investment criteria for donations and philanthropy for both the balance and growth visa categories. Charities must be New Zealand registered with an IRD donee status, and additionally, they must also have at least 5 years of compliant annual returns, be classified in tiers 1 to 3 on the charity's register, and use their donations entirely within New Zealand for domestic causes. Applicants must also disclose any relationship with the recipient charity, and the donations must not result in any direct private benefit to the applicant or their family. Donations can also be made to approved Department of Conservation projects specified on their website. The third policy update is that INZ is responsible for assessing donations. The responsibility for assessing donations will sit with Immigration New Zealand rather than Invest New Zealand. This aligns with existing practice in the balance category. Now let's turn to the data and look at how the Active Investor Plus category is tracking. Now these stats were pulled on the 9th of June 2026. So the Active Investor Plus visa relaunched on the 1st of April 2025. As of the 9th of June 2026, INZ has received 760 applications under the new settings for 2,491 applicants. 609 applicants have been approved in principle, and the average time for an application under the new settings to be approved in principle is 36 working days. And the average time for an application under the new settings to be approved once investment documentation has been provided to Immigration New Zealand is 35 working days. Now that we've looked at the data and what we're seeing in practice, let's take a step back and walk through the Active Investor Plus lifecycle as a whole. The Active Investor Plus visa provides global investors with a pathway to New Zealand residency through investment. Under this visa, applicants can choose between two investment categories. First is the growth category. Applicants must make a minimum investment of 5 million New Zealand dollars in acceptable New Zealand investments retained for 36 months. The second option is the balance category. applicants must make a minimum investment of 10 million New Zealand dollars in acceptable New Zealand investments retained for 60 months. Now, the Active Investor Plus visa can be understood in 6 key stages. Stage 1. Application submitted. This is when the applicant lodges their application. Next is Stage 2. Approval in Principle, or AIP for short. If the applicant meets the key requirements, INZ grants approval in principle. This includes meeting health, character, fit and proper person requirements, and nominated funds or assets of at least 5 million New Zealand dollars for the growth category or 10 million New Zealand dollars for the balance category. The applicant must also show that the funds are owned by them and were legally acquired. If successful, Immigration New Zealand issues an Approval in Principle or AIP letter. Stage 3. This is the transfer and investment period. Within 6 months of AIP, the applicant must transfer their nominated funds to New Zealand and invest them with acceptable investments. Stage 4. Resident visa granted. Once Immigration New Zealand is satisfied that the funds have been transferred and invested, a resident visa is granted with Section 49 conditions. Next is Stage 5. Section 49 Monitoring. INZ monitors compliance with those conditions, including investment retention, time in New Zealand, and completing the required questionnaires. Next is Stage 6. Permanent resident visa eligibility. Once all conditions are met, the applicant may be eligible for a permanent resident visa. Today, we'll be focusing on the Stage 3, transfer and investment period, as this is where most of the operational complexity sits. In the transfer and investment stage, INZ is basically assessing 4 key things. First, have the nominated funds been transferred to New Zealand? Second, have the nominated funds been invested in acceptable investments? Third, has the required investment amount been met? Fourth, were the transfer and investment of funds completed within the required timeframe? Applicants must provide evidence to demonstrate that all 4 requirements have been met in line with the immigration instructions. Let's start with the first requirement of the transfer and investment stage. The principal applicant must transfer their nominated funds or funds from the sale of nominated assets to New Zealand. I will now pass on to Richa to discuss this first requirement in further detail.
Kia ora and welcome everybody. My name is Richa Trivedi and I am also a senior advisor at Immigration New Zealand. Let's talk about which funds must be transferred. So the principal applicant must transfer either the funds listed in the AIP letter or funds from the sale of assets listed in the AIP letter. These are the applicant's nominated funds. The nominated funds may come from the applicant's bank accounts, property, investment portfolios, and company shares. In this example, the applicant's nominated funds came from their bank account. So where can the funds be transferred from? You may be wondering. So the first graphic shows us that offshore nominated funds must be transferred to New Zealand from one of the following sources. Number 1, the principal applicant's bank account. 2, a joint account with someone included in the application. Or 3, an approved third party, where the funds can be clearly identified as belonging to the principal applicant, their partner, or dependent child included in the application. Approved third parties may include a solicitor's trust account acting on their behalf, a pension scheme, or investment portfolio account in the applicant's name. For pension schemes, the funds must be able to be liquidated, withdrawn, and transferred to New Zealand by the provider on the applicant's behalf. For investment portfolios, the assets must be liquidated, moved into applicant's cash account, and then transferred to New Zealand. So, how must the funds be transferred? The second graphic shows that funds must be transferred through the banking system using an international payment. The transfers must be lawful, fully documented, traceable, and not involve physical cash. In terms of evidence requirements, a SWIFT confirmation is typically used to show cross-border transfer. If using a foreign exchange, company and money transfer business, the transfer must be processed through the banking system using an international payment. So you may be wondering what evidence is required to show that the funds have been transferred to New Zealand. The third graphic focuses on what happens after funds are transferred to New Zealand. At this stage, applicants need to provide evidence to INZ, and the type of evidence will depend on the source of funds. We will walk you through some of the pieces of evidence on the next slide. So this slide lists the different pieces of evidences applicants can provide to show that their nominated funds have been transferred to New Zealand. We won't go through all of them in great detail as they are found on the Immigration New Zealand website, but the key point here is that INZ needs to see the full money trail. For example, if the funds came from a bank account, the applicant should provide bank statements showing the funds from the as of date on the approval in principle letter through to transfer to New Zealand, receipt of funds in New Zealand, and retention of funds until they are invested into acceptable investments. If the funds came from selling property, the applicant should provide the sale and purchase agreement and any relevant tax documents. They should also provide bank statements showing the receipt of sale proceeds, retention of funds prior to transfer, receipt of funds in New Zealand, and retention of funds until they are invested in acceptable investments. Now we will move on to some FAQs for this topic. So the first one here we have is, can applicants transfer and invest borrowed funds? The answer to that is yes. Borrowed funds may be accepted in some limited situations. If applicants nominate an asset, it must be one they intend to liquidate into cash, so the funds can be transferred to New Zealand. However, if it becomes impractical or not economically viable to liquidate that asset in the AIP letter, applicants may instead use borrowed funds secured against it. Borrowed funds are acceptable where the applicant shows that the lender is an acceptable bank or commercial lender, the loan is secured against the nominated asset, and the asset could not be practically or economically liquidated. Moving on to the next one. When the funds arrive to New Zealand, what New Zealand bank account should it be transferred to? So the answer to that is immigration instructions do not specify whose New Zealand bank account the funds must be transferred to. However, applicants must show they retain control of the funds until they are placed into acceptable investments. For example, an applicant can transfer their offshore nominated funds directly to the bank account of the fund manager if they are an acceptable investment. Let's move on to the second requirement of the transfer and investment stage. So the applicant must invest the nominated funds into acceptable investments. What makes an investment acceptable? An investment is acceptable for the active investor plus visa if it is not for personal use and is invested in New Zealand dollars, and is on the approved list for either the growth or the balance category. The next question here is, what are the types of acceptable investments for growth and the balance category? Acceptable investments for growth category include direct investments, managed funds, or philanthropy. That is the maximum of 20% of the total amount invested. Acceptable investments for the balanced category include direct investments, managed funds, philanthropy, listed equities, bonds, or property developments. Next up, the question here is, what evidence is required to demonstrate that nominated funds have been invested in acceptable investments? So the evidence depends on the investment type. This slide lists the different pieces of evidence you can provide to show that your nominated funds have been invested into acceptable investments. We won't be going through all of them in great detail, but the key point here is that Immigration New Zealand must be able to confirm both the acceptability of investment and the transaction trail. For example, for direct investments, applicants should provide bank statements that show funds have been transferred to the direct investment, Invest New Zealand approval, company register extract, and shareholder or share subscription agreements. For managed funds, applicants should provide bank statements that show the funds have been transferred to the managed funds, the legal agreement with the funds manager or nominee, and transaction statement confirming that the investment has been accepted by the managed funds. I will now hand over to Yasmin to take you through some more FAQs. Over to you, Yasmin.
Great. Thank you so much for covering that, Richa. We'll now move on to some more FAQs for this topic. The first four questions are related to managed funds. Managed funds require legal agreements as evidence. Could you clarify what is expected? For managed fund investments approved by Invest New Zealand, a legally binding agreement must be in place between the applicant and the fund manager, or between the applicant and a nominee, such as an investment company. Where no nominee is used, applicants should provide a direct agreement with a managed fund, such as an application form or subscription agreement, and a transaction confirmation confirming that the managed fund has accepted the investment. Where a nominee, such as investment company, is used, applicants should provide a client service agreement that confirms that the applicant is using the nominee's services, confirms that the nominee is authorized to invest in managed funds on the applicant's behalf, specifies that the managed funds and amounts committed is supported by a transaction statement confirming the investment has been accepted. It is important to note that a confirmation letter or transaction statement on its own is not sufficient to meet evidential requirements. Let's now move on to the second question regarding managed funds. Can you explain on-call investments and the 25% cash allowance for managed funds? Where an applicant has invested in managed funds, but the full capital has not yet been called, the remaining funds must be held in on-call investments, which are temporary liquid investments. These can include equities, bonds, or funds held in a bank account or term deposit. However, immigration instructions specify how these funds must be allocated, including limits on how much can be held in the bank account or term deposit. Applicants have two options for their uncalled funds. One is to hold 100% in acceptable equities or bonds, or two, hold at least 75% in acceptable equities or bonds and up to a maximum of 25% in New Zealand bank account or term deposit. Please note that the 25% limit in bank account and term deposit is based on the entire amount the applicant committed into managed funds, regardless of when the fund manager uses them. For example, if applicant committed 5 million New Zealand dollars into managed funds and the fund manager used 2 million New Zealand dollars of it immediately, of the New Zealand dollars 5 million committed, 25% or 1.25 million can be held in a bank account or term deposit, and 75% or 3.75 million must be invested in acceptable listed equities or bonds until the fund manager uses them. Immigration instructions also provide withdrawal rules for on-call investments. Funds invested in on-call investments must not be withdrawn except to meet the capital call of the managed fund or pay any required costs associated with the on-call investment such as taxes or fees, or be transferred to other acceptable on-call investments, or fund transfers between acceptable on-call investments, including, for example, when a bond matures, and this must be completed within 30 days during the time in which they may be held in a New Zealand bank account or term deposit. I'll explain more about this on the next slide. So let's move on to the third question regarding managed funds. What if an applicant's on-call investments include bonds, and a bond matures, and the funds are transferred into the applicant's cash account? This can increase the applicant's cash proportion of the on-call investments to over 25%. Well, if this happens, the extra amount above 25% will not be counted as long as the applicant reinvests the funds into another acceptable on-call investment within 30 days. At the compliance check, it must also be clearly shown that the increase above 25% was due to the bond maturing. Let's move on to the final question on managed funds. What can the income or profit from the on-call investments be used for? It can be used to meet capital calls for managed funds or withdrawn as it is not treated as investment funds that must be retained. The next question is about property. Now, there appears to be some misunderstanding of the requirement of acceptable investments into existing commercial or industrial property development. Can you provide some guidance? Investment in existing commercial or industrial property must be focused on making improvements, not just purchasing the property. This means that an applicant therefore cannot use the 10 million New Zealand dollar investment to acquire the property alone, as this means there would be no funds left available to make improvements to the property. The same requirement applies when investing in a New Zealand property development company. The improvements made must be substantive and form a key part of the investment. These improvements should be meaningful upgrades that support a productive business use. Examples of acceptable improvements include building strengthening and significant renovations that materially increase the property's value. Minor works or general maintenance like replacing carpets or curtains are not acceptable. Now, let's move on to the third requirement of the transfer and investment stage. The applicant must invest the required investment amount. For the growth category, the applicants must invest at least 5 million New Zealand dollars. And for the balance category, the applicants must invest at least 10 million New Zealand dollars. So with those investment thresholds in mind, a question we often get is, can additional funds be nominated? Applicants can nominate additional funds if the value of their original nominated funds decreases in New Zealand dollars due to exchange rate changes or unforeseen circumstances after the AIP has been granted. Now, this is only allowed if the applicant has received an Approval in Principle or AIP letter, the original nominated funds have already been transferred to New Zealand, and evidence is provided to show that the loss in New Zealand dollar value due to currency exchange or unforeseen circumstances. And also, evidence of the additional funds is provided within 6 months of the AIP. Immigration New Zealand will assess whether the additional funds are owned by the applicant and legally acquired. If approved, a new AIP letter is issued listing the updated nominated funds. It is important to know that the new AIP letter must be issued before the additional funds are invested, as only nominated funds can be invested. With that, I will now hand over to Richa to talk about the fourth requirement of the transfer and investment stage.
Thank you again, Yasmin. That was very comprehensive and helpful. Let's move on to the fourth requirement of the transfer and investment stage. The applicant must transfer and invest the funds within the required time frame. So here is an overview of the Active Investor Plus key time frames. The first one is transfer and investment. So funds must be transferred and invested within 6 months of the AIP letter unless an extension is granted. The second one is evidence submitted. So the evidence that the funds were transferred and invested must be provided to Immigration New Zealand within 3 months after the 6-month transfer and investment period ends. And the last one on the list is investment retention period. For the growth category, applicants must retain a minimum of New Zealand dollars 5 million for 36 months. For the balanced category, applicants must retain a minimum of New Zealand dollars 10 million for 60 months. Here are some practical reminders when providing evidence of completed transfer and investment to Immigration New Zealand. Some of them we have discussed already, but warrant being emphasized again. The first one is please include a cover letter summarizing the supporting documents. 2. Clearly label or tag each document as it makes it easy to match the evidence to the relevant immigration instructions and also supports smooth processing. 3. Provide bank statements showing the funds from the AIP as at date through to transfer and investment. 4. Provide transfer evidence showing that the funds were sent through the international banking system by providing a SWIFT confirmation or equivalent. And 5. For the full list of acceptable transfer and investment evidence, we recommend referring to the Immigration New Zealand website, which provides detailed guidance on meeting all these requirements.
So, once INZ is satisfied that the transfer and investment requirements have been met, the application then moves on to the next stage, that is, the grant of a resident visa with Section 49 conditions. On the screen is an example of a resident visa approval letter with Section 49 conditions. So when does the investment period start? For the growth category, the investment period starts from the date all acceptable investments are completed. It must then be retained for 36 months. For the balanced category, the investment period starts from the date all acceptable investments are completed. It must then be retained for 60 months. If you want to confirm the exact start date, this is clearly stated in the resident visa letter with Section 49 conditions. In this example, the applicant is in the balanced category and their investment period starts on 19th of November 2025. There are also a couple of additional points to be aware of. 1. If investments are completed before approval in principle, the investment period starts from the approval in principle date. 2. For managed funds, if the full committed capital is transferred upfront, the period starts when the managed fund receives the funds. If capital is called over time, the period starts from the later of when the capital is committed or when any uncalled funds are placed into acceptable on-call investments.
So moving on to the next slide. Now that we have walked you through the transfer and investment stage, including when the investment period begins, the next key step is understanding who is responsible for assessing different parts of the application and investments. I will now outline the respective roles and responsibilities of Immigration New Zealand and Invest New Zealand. Immigration New Zealand assesses the visa application itself, including balanced category investments and philanthropic investments within both the balance and the growth categories. It is important for us to be clear that Immigration New Zealand does not pre approve or pre assess either growth or balanced category investments. Immigration New Zealand can only respond to queries related to lodged applications. We cannot provide advice on hypothetical scenarios before an application is submitted. Applicants will need to demonstrate how they meet immigration instructions. Invest New Zealand assesses and pre approves growth category investments, with the exception of philanthropic investments. So, the distinction here is that Immigration New Zealand is focused on the visa application and those specific investment components, while Invest New Zealand is solely responsible for assessing most growth category investments only. So it is a good time to remind those who are involved with the Active Investor Plus category about their obligations and rules for providing immigration advice and financial advice. Immigration advice can only be provided by licensed immigration advisors or eligible lawyers. Providing it unlawfully is an offense with penalties of up to 100,000 in fines and or up to 7 years of imprisonment. Financial advice must be given by a licensed financial advice provider or an advisor under that license. Breaches can lead to action by the Financial Markets Authority, including license sanctions, stop orders, and civil penalties. So, we do recommend that applicants seek independent immigration and financial advice with licensed providers where needed. Here we come to the end of our session today. Thank you so much for joining us today. For those supporting applicants, including immigration and financial professionals, your role is key in helping navigate the requirements and ensuring compliance throughout the Active Investor Plus journey. And for applicants, this stage is an important milestone as you complete your transfer and investment and move closer to establishing yourself in New Zealand. We appreciate engagement and we look forward to supporting successful outcomes and seeing the positive contribution your investment brings to New Zealand. Thank you all again for your attention. Ngā mihi.